In recent years, there has been a notable paradigm shift in the world of finance, with an increasing number of investors prioritizing sustainability alongside financial returns. Sustainable investing, also known as responsible or ESG, environmental, social, and governance investing, has gained significant traction, transforming the investment landscape. This shift reflects a growing awareness of the interconnectedness between financial success and the broader impact on the planet and society. The evolution of sustainable investing. Historically, traditional investing has focused primarily on financial performance, often overlooking the broader implications of business activities. However, the rise of sustainable investing represents a departure from this conventional approach. Investors are now considering not only profitability but also the environmental, social, and governance practices of the companies in which they invest. Environmental factors. One of the key pillars of sustainable investing is the consideration of environmental factors. Climate change, resource depletion, and pollution are pressing global issues, and investors are increasingly recognizing the importance of supporting businesses that prioritize sustainability. Companies committed to reducing their carbon footprint, implementing renewable energy practices, and adopting eco-friendly technologies are finding favor among environmentally conscious investors. Social considerations. Sustainable investing also takes into account the social impact of businesses. Investors are increasingly scrutinizing companies' labor practices, human rights records, and contributions to community development. Businesses that demonstrate a commitment to diversity, inclusion, and fair labor practices are gaining attention as investors seek to align their portfolios with socially responsible values. Governance practices. The G in ESG stands for governance, which encompasses the structures and processes by which companies are directed and controlled. Investors are now placing greater importance on transparent and ethical corporate governance. Companies that prioritize shareholder rights, maintain integrity in financial reporting, and have effective risk management systems are becoming more attractive to investors seeking stable and responsible investments. Financial performance and long-term value. Contrary to the belief that prioritizing sustainability may come at the expense of financial returns, numerous studies have shown that companies with strong ESG performance often outperform their peers in the long run. Investors are recognizing that sustainable practices can contribute to operational efficiency, risk mitigation, and the creation of long-term shareholder value. The mainstreaming of sustainable investing. What was once considered a niche investment strategy has now become mainstream. Institutional investors, asset managers, and individual investors alike are incorporating sustainability considerations into their decision-making processes. The demand for ESG-focused investment products has led to the development of a wide range of sustainable funds and indices, providing investors with more options to align their portfolios with their values. Regulatory and corporate responses. Governments and regulatory bodies around the world are also recognizing the importance of sustainability. Many countries are implementing or considering regulations that require companies to disclose their ESG practices. In response, corporations are increasingly adopting sustainable business models and reporting frameworks to meet these evolving standards and investor expectations. Challenges and opportunities. While the rise of sustainable investing is promising, it is not without challenges. Standardization of ESG metrics, greenwashing concerns, and the need for consistent and reliable reporting are areas that require attention. Here are some of the key trends that are shaping the future of sustainable investing. The rise of thematic investing. Thematic investing involves investing in companies that are focused on specific sustainability themes, such as clean energy, water conservation, or sustainable food production. The growth of impact investing. Impact investing is a form of sustainable investing that seeks to achieve both financial returns and positive social and environmental impact. The increasing use of technology. Technology is playing an increasingly important role in sustainable investing, as it is making it easier for investors to track and measure the impact of their investments. The rise of sustainable investing is not without its challenges. One of the biggest challenges is the lack of standardization in ESG data. This can make it difficult for investors to compare and contrast the sustainability of different companies. Another challenge is the greenwashing phenomenon, where companies make false or misleading claims about their sustainability practices. Investors need to be careful to do their due diligence before investing in any company. Despite these challenges, the future of sustainable investing is bright. As investors become more aware of the risks and opportunities associated with ESG factors, we can expect to see even more money flow into sustainable investments. This could have a significant impact on the way companies operate and the world we live in. The rise of sustainable investing marks a transformative shift in the financial industry, reflecting a growing awareness of the broader impact of investment decisions. As investors increasingly recognize the interconnectedness of financial success, environmental stewardship, and social responsibility, the momentum behind sustainable investing is likely to continue. The integration of ESG factors into investment strategies not only aligns portfolios with values but also positions investors to contribute positively to the world while seeking attractive financial returns. In this new era of finance, the rise of sustainable investing is more than a trend, it is a fundamental re-evaluation of the role of capital in shaping a sustainable and equitable future. The world is changing, and so is the way we invest. In recent years, there has been a dramatic rise in sustainable investing, a trend driven by a growing awareness of the environmental and social challenges we face. Sustainable investing is a broad term that encompasses a variety of approaches to investing that consider environmental, social, and governance (ESG) factors. This could involve investing in companies that are committed to renewable energy, reducing their carbon footprint, or promoting diversity and inclusion in the workplace. It could also mean avoiding companies that are involved in harmful activities, such as deforestation or human rights abuses. Why is sustainable investing on the rise? There are a number of factors driving the growth of sustainable investing. These include growing concern about climate change and other environmental issues. Investors are increasingly recognizing the financial risks associated with climate change and other environmental challenges. For example, a recent study by the Swiss Re Institute found that climate change could cause up to $24 trillion in global economic losses by 2050. A desire to make a positive impact on the world. Many investors are motivated by a desire to make a positive impact on the world, and they see sustainable investing as a way to do that. Strong financial performance of sustainable investments. There is growing evidence that sustainable investments can outperform traditional investments over the long term. For example, a 2020 study by Morgan Stanley found that sustainable funds outperform traditional funds by an average of 4% per year over a 10-year period. Increased regulation and disclosure of ESG factors. Governments around the world are starting to take ESG factors more seriously, and this is leading to increased regulation and disclosure of ESG data. This is making it easier for investors to compare and contrast the sustainability of different companies. The future of sustainable investing. The rise of sustainable investing is still in its early stages, but it is clear that this trend is here to stay. Thank you for joining us on this financial journey. We hope today's insights have added value to your financial literacy. Remember, financial success is a journey, not a destination. If you enjoyed today's content, don't forget to hit the like button, share with your friends, and subscribe for more insightful videos.